The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone. Welcome to Nova 401k Associates webinar on Introduction to 401k Plans for Plan Sponsors. Today's webinar is eligible for CPA credit. About an hour after the webinar, you will receive a follow-up email with the survey to complete if you are needing CPA credit. We have also added the slides as a handout. To access the slides, just click the handout drop-down on your GoToWebinar panel, and you can download and save the file to your local folder. Today's presentation will be presented by Lisa Dillman, Assistant Team Leader at our Austin office, and also by Katrina Goodwin, Team Leader at Nova. If you have any questions, please type them in the questions box and we will answer them throughout the presentation. I will now hand it over to Lisa.
Thank you, Jasmine. Hi, everybody. Thanks for joining us for our presentation today. This webinar is geared towards people who are new to administering 401k plans, as well as brand new startup 401k plans or new plans with Nova. So your plan might have been in existence for a while, but you are new to it, and so we're giving this presentation as well to help out with new people involved in the 401k plan. And we're going to go over, well, first let's do our disclaimer. The information in this presentation is general in nature and not to be substituted for legal or tax advice. So if you have legal or tax advice regarding your 401k plan, please contact an attorney and or accountant as needed. And as Jasmine said, we do offer CPA credit, and here is our provider number and the instructions on how to do that. Again, this is in the PDF version of these slides that's in the handout section of GoToWebinar. So today we're going to go over the roles and responsibilities within your 401k plan, Nova's cybersecurity measures, what we're doing on our end to help with prevent fraud, 401k basics, that's going to be the meat of the 401k plan discussion, the moving pieces, within the 401k plan distribution, and then loan basics, and then an annual calendar of kind of when things are due either by Nova or the government within the 401k plan. So we're going to go through all that. I'm going to cover the first three, and then we will switch it over to Katrina to then cover the remainder of it. If you do have questions, go ahead and type them in that GoToWebinar panel, and then Jasmine will interrupt me when there's a pause, and I can take those questions and answer them. All right. Okay, so looks like the roles and responsibilities slide got moved. All right, so we'll start with our cybersecurity measures. And within the last few years, bad people have decided to start looking at retirement plans to steal money from people who are trying to save for their retirement. And it's gotten a lot more coordinated. They've gotten a lot more smart about it. And so the record keepers and the TPAs, which is what Nova is, our third-party administrator, we are working hard to try and keep that fraud minimized, because, you know, in a perfect world, we could zero out all fraud, but this is not a perfect world, but we do try to minimize any fraud as much as possible. And so when, if a con artist person requests a loan or a distribution from someone else's retirement plan, if they do it as an ACH or a wire transfer, it's really difficult to recover those funds when the theft is discovered. It's easier with a check because checks take longer through the mail, takes longer to get processed. You can put a stop check on it, hopefully before it actually gets cashed. But you know, with direct deposit and wires, it's much more difficult. You know, the plan has a required Fidelity Bond on it, and that is to cover certain losses in the plan. You also probably have fiduciary insurance that covers the fiduciaries of the plan. And then your actual company may have E&O insurance to help out with, legal issues or something like that. Theft of fraud from a distribution or loan request from your retirement plan is not covered by any of these three types of things. Sadly, so we need to be even more vigilant to try and do our part to prevent those fraudsters from succeeding with that retirement money. So one of the main things to do is never send any information through email without encryption that includes personal identification information, PII. That includes full Social Security numbers, dates of birth, addresses. If you have all those things in there, then a con person can go in and request that information because they can hack into your email and find that information. So a lot of the files that NOVA provides to the plan sponsor for your 401k plan, census files, testing files, valuation reports, those kind of things we provide, but we do not send them via email, and we always mask the Social Security number. We request from you census files, maybe copies of tax forms, and then you also provide payroll files, deferral, and address files to the record keeper. So there's a lot of files going all over the place, and you just need to make sure that when they're sent, if it includes that PII, it's always sent either through a secure portal or with encryption in an email. So NOVA's favorite way to for you to send us this information and us to send you any information with PII is to use our secure web portal, plansponsorlink.com/NOVA401k. When you have your plan set up with NOVA, or when you have a new contact set up on your plan with NOVA, then we will give you access to our secure web portal. You will have your own individual login with your own password that we do not have access to, okay? Only you and Plan Sponsor Link know what that password is. It is a pretty easy web portal to transfer data from us to you and vice versa, okay? There's also encryption software, so if you need to send something to us via email, you can't get into Plan Sponsor Link, what have you, we have an encryption software called Zix Select, and we can send you a secure email. You create a login, and then you can email something back to us through that logged in secure email. That way it is encrypted, okay? Anytime you have a new contact on your plan that you want NOVA to allow access to all the files in Plan Sponsor Link, we must receive authorization from an existing contact. We will not accept an email from some new person in your company who's taking on the role and just give them access. We have to have approval from an existing contact on the plan, okay? We also here at NOVA have mandatory training on IT, on PII, on cybersecurity every quarter. And our policy over the past few years is every 90 days, we change all passwords on our websites that have secure information in PII. So we take it very seriously, and we have a lot of steps in place. We ask that you do use your Plan Sponsor Link web portal as often as possible. If you do send an email that is encrypted, limit the number of people copied on that email, because you don't want a lot of people to have that email with PII on it, and then somebody that received that email who didn't really need that information, they were just being copied, a hacker getting it in their email and download and get that information. So you just want to limit the number of people on emails with PII or personal identification information. Use complex and long passwords and we do suggest that you change them often. Okay, here's the roles and responsibilities. This is the first item listed in our agenda, but it is second today. As you can see on here, there's 4 main people involved in a 401k plan administration. You have your plan sponsor. That is the company who is offering, let me go backwards. That is the company who is offering the plan to their employees. That is the plan sponsor, i.e. you, most likely. You have the financial advisor. They work with the plan sponsor to provide information on the investments selection within the 401k plan. Going over here, you have the investment provider. They are the ones who invest the contributions that are funded into the plan, into the investment selections chosen by either the financial advisor, the plan sponsor, or the participant. Okay? And then you have the TPA, i.e. NOVA 401k Associates, the third-party administrator. So you have these 4 people. The plan sponsors overall, they have the overall fiduciary responsibility on the plan. They communicate the plan to the employees unless they have outsourced part of that communication. They remit plan contributions to the investment provider, unless, of course, they've outsourced that to their payroll or another fiduciary company like AFS 316. And they provide the requested data to the TPA annually for us to do our required compliance testing and Form 5500 preparation. The financial advisor, they assist with initially with the vendor selection and monitoring, so the investment provider, i.e. vendor. They coordinate enrollment meetings with your employees, preferably twice a year, if not more, or a minimum of once a year, to talk about the plan, to talk about the investments, and get more employees enrolled. They provide investment education to your employees, and they assist the plan sponsor with 404C compliance, which is fee disclosure and investment selection notice compliance. The investment provider, we also call them the record keeper. They are your custodian of the plan assets. So it could be Voya, John Hancock, Empower, Mass Mutual, Charles Schwab, Fidelity, any of those people where you actually are sending the contributions to and they're getting invested. That is your investment provider or your record keeper. They provide participant statements on a quarterly basis. And once a participant wants to take money from their 401k account, the investment provider deals with the distribution, withholding, and reporting. Third-party administrator, or TPA, i.e. NOVA, we prepare and maintain your plan document as long as you're with us. We complete the required annual testing on that 401k plan. We prepare the annual filings, which is the Form 5500, and maybe additional filings that get filed to the Department of Labor. And we do ongoing plan consulting. So if you have questions regarding the 401k plan, how to administer it, how to do certain things, you come to us. All right, now 401k basics. 401k plans are one of the biggest opportunities for savings accounts this day and age, okay? You know, a lot of people don't save in their own savings account. They don't do their own investments. The majority of people don't, and so they end up saving and investing within their 401k plan. And it is a valuable employee benefit to the employees because they get to save money, and then to you because you get to use that as a way to entice hirees that you're trying to get into your company to come on board with you, because you do offer this retirement savings account for them. They have to put contributions in, but then if you do employer contributions, that's an added benefit. Let's see. Why isn't it moving forward? Did I skip one? No. Okay. It's just going a little slow. All right. 401k plans are heavily regulated. That's why there's so many people involved in the 401k plan. There's so many moving parts, and they are very heavily regulated by the IRS, Internal Revenue Service, and the Department of Labor, the DOL. And each of those government entities focuses on different parts of a 401k plan to regulate, and I'll go into that momentarily. Common sense does not always help. Government regulations, for the most part, do not use common sense. You might think you have a question, you might think you know the answer based on logic and common sense, and you find out that that's totally wrong. Government sometimes is not logical for whatever reason. So, and I always tell all of my clients, there is no stupid question within a 401k plan. If you are not 100% sure of an answer to a question that you have, contact me or your account manager at Nova, because it's easier for you to ask a quick question and get an answer than to think you know the answer, maybe have an error or a mistake, and then to fix that error or mistake based on what the regulations say is an allowable fix. So just keep that in mind. The rules are frequently changing. I've been in the industry for, I don't know, 13, 14 years, and I don't know all the rules, I don't know all the regulations, and they're constantly changing. This is one of the jobs where I learn something new every week, if not every day, okay? And your written plan document controls in almost all cases, and we'll go over that. So here, for example 1. You want to exclude hourly employees from the 401k plan. In order to do that, your plan document must state that you're going to exclude hourly employees. And if you do put that in the plan document, you must pass IRS coverage testing, which Nova does on an annual basis. If you don't pass coverage testing, you have to bring people in, and so it's like you didn't even exclude those hourly employees in the first place. So if you want to exclude a certain portion of employees, a certain division, you definitely need to talk to your Nova account manager about these exclusions and do an analysis to see if you will pass coverage testing with those exclusions. Because if you won't pass coverage testing with those exclusions, then you shouldn't exclude them at all. And so, but your document has to say that. You cannot just put that in your benefits package and go with it. The plan document has to state that. All right, so as I stated, the IRS and DOL have different areas that they regulate within the 401k plans. So the IRS deals with compliance with federal statute and their own regulations. They deal with non-discrimination testing, making sure that it's fair for all people involved within the plan. They look at taxable events and deduction limits to make sure that no one has exceeded those allowable limits that are set every year. They make sure that the plan document has been executed timely as well as amended timely. Whether it's an amendment that you've elected because you want to change something in the document, or an amendment that is required by the government. So they make sure that it's been done timely, and they make sure that the terms of the plan document are being followed. So let's say the IRS is doing an audit and you kept hourly employees from being excluded, but you didn't put it in the plan document. The IRS is going to see that you didn't have it in the document, therefore those hourly employees should have been allowed to participate. Therefore, you are going against your plan document, and you'll probably have penalties and fees. So those are the things that the IRS looks at. Now, the Department of Labor is more geared towards the participant side of things. They look to see that the 401k contributions from the employees, as well as any loan repayments, if your plan allows for loans to be taken, are deposited timely back into the plan for that plan participant. They look to see if the investment selection lineup that is offered within the plan is prudent for those participants. Are they offering good, decent returns on the market, or are they losing money every quarter? Was it not a balanced investment selection? So that's what they look at to make sure that the participants have decent investment selections and that they are good investments for the plan participants based on, what's happening with Wall Street and everything else. They look to see if the expenses paid by the plan are reasonable. So if any expenses are paid by the participant accounts from the plan, they want to make sure that it's reasonable. That doesn't mean it has to be the cheapest. It doesn't mean you have to go for the cheapest third-party administrator, the cheapest investment advisor, the cheapest record keeper. It just means that it has to be reasonable for the amount of support that you're getting, the amount of services you're getting, and what your plan is looking to do, okay? And they make sure that the required informational tax form 5500 is submitted to the Department of Labor every year, okay? NOVA prepares those to be electronically filed every year, so we prepare those on your behalf. Let's go backwards. That key doesn't work. So what is the preferred investment alternative for an employee who puts money into a 401k plan but fails to make an investment selection? So this is what is called a qualified default investment election. And so every time a 401k plan is set up, it is usually set up with what is called the investment election, meaning, the qualified default. Yeah, the default investment. Because if the employee starts contributing to the 401k plan, but they haven't gone in and selected their investment, the money doesn't go into just cash. It has to go into some kind of investment. So according to recent Department of Labor regulations, those default investments should be a balanced fund or a life cycle fund, okay? Those are typically very conservative based on an age, the life cycle funds. Balanced funds are conservative based on the types of stocks they put in there, or mutual funds. And they typically earn money without losing too much money. They're not risky. And then once the employee goes and picks their election, then they can decide to leave it in the default fund or move it into different investment selections allowed for the plan. A few years ago, it was allowed to be in a money market account or a stable value fund. However, the Department of Labor said that money market and stable value funds were not earning enough to offset the fees and the losses. So they changed it to this balanced fund or life cycle fund. This one is incredibly important, is your timely deposits of your contributions, of your employees' contributions and loan repayments. So back in 2010, the Department of Labor said that for a small plan, which is less than 100 participants, eligible plan participants, well, eligible and terminated with an account balance. So if you have less than 100 people in the plan, then the deposits of the employees' contributions and loan repayments must be deposited by the 7th business day after they are withheld from paychecks. Okay, so if you withhold paychecks on December 2nd, that money has to have been deposited into the record keeper by December 9th. All right, well, no, because it's 7th business day, so you can skip the weekend days. So we'll do December 11th, okay? For large plans, more than 100 participants, we really, in the industry, we want the Department of Labor to set specific guidelines for this, like they did with small plans, but they just will not do it. So they say it has to be deposited as soon as administratively possible, or the 15th business day of the month following the payroll withholdings, okay? Very vague. It's a huge issue with Department of Labor audits and plans subject to CPA audit. I just had a plan go through a Department of Labor audit, and the Department of Labor said, okay, we're going to give you 5 business days. It looked like as soon as administratively possible, and the median time frame was 5 business days. That's what we're going to go through it for. There have been some that are 2 business days, you know, and so it just really depends. So you really want to be consistent, and you want to do it as soon as administratively feasible. So if you can do payroll and get the money deposited within 3 business days every time, you want to be consistent. You want to be doing it as soon as possible. So if you ever were to get audited, you can present, here's how your procedures are, and this is why it takes 3 business days, and you're consistent in that, and so, you know, hopefully they'll give you a gold star for that. So the Form 5500, as I said earlier, it is an informational tax form. It is an annual report on the plan that is submitted to the Department of Labor, and it gives you basically the full year summary of beginning balance, ending balance, income, and expenses, and then how many participants are listed in the plan. It includes fees paid from the plan and some other information. It is required by law, by regulation, to be filed electronically. So NOVA prepares it on our end. Then we send you the link to the web page where you go in and you put in your electronic signing PIN and password, and then you sign it electronically, and it'll immediately go to the Department of Labor. So you don't have to prepare the form. You just have to download it, look at it, and to do a quick review, and then you submit it electronically. Super easy. A large item for DLL random audits is Fidelity Bond coverage. The Form 5500 that is submitted always includes the amount of the plan's Fidelity Bond coverage. And so it has been a new way to go and audit a plan if the Department of Labor gets a Form 5500 that does not state that the plan is covered by a Fidelity Bond. So when us here at NOVA contacts you about the plan, whether you have a Fidelity Bond and how much that coverage is, if it's enough to cover the regulations, it's very important to follow through with that because it is something that the Department of Labor is looking at. Another thing is plans that have more than 100 participants or more than 120, depending on what year it is being reported. You have to have an independent audit done on the 401k plan, and you have to attach that copy of the audit report to the Form 5500 before it can be filed. And NOVA works directly in conjunction with your auditor to make sure that that audit is completed and completed timely. Some new items within the 401k industry is payroll integration. So because of all of the technology and automation that's happening in our world, certain payroll providers can submit full census data each pay period to your record keeper. So I know Paylocity is one of them. They can submit your company's payroll data each pay period, which includes contributions withheld, employer contributions matched, and all that stuff, directly to MassMutual. Okay, so they can send that information each pay period to MassMutual, so you don't have to do it. And it includes all employees, regardless as to whether they are contributing, or in this case, we use the word defer, which is the technical term, regardless if they are deferring or contributing to the 401k plan from their paycheck. Okay. It's great to be used because we can pull the annual census data from your record keeper instead of asking you for that information on an annual basis. When a termination date is received in the census file, the vendor or record keeper will send a distribution packet to the participant, depending on the specific record keeper. And if their account is under the $5,000 balance threshold, then they can be forced out of the plan if they did not respond to the distribution packet within 30 to 45 days. So that can really help keep your plan, quote, clean, unquote, of terminated participants with low account balances, because then you don't have to worry about getting them annual notices every year. You don't have to worry about them increasing your number of participants in the plan that could possibly put you over that audit threshold. And they can just get their money out of the plan and you can be done with it. It's just one less person to deal with as far as the 401k plan goes, okay? Certain record keepers can track enrollment. So with Payroll Integration, once new employee data is received and they're coming into the eligibility period to enter the plan, that record keeper will send an enrollment packet directly to that participant for them to review and complete and fill out their part so that they can get enrolled in the plan. You don't have to deal with it. And then any census data that's updated at the vendor will automatically be updated from the payroll files. So if you have an employee whose address changes, the Payroll Integration will automatically update that address to the record keeper so that it'll always be the most current information. There's two types of Payroll Integration, Payroll 360 and Payroll 180. 360 is the best. The data flows both ways. It goes from your payroll provider to your record keeper and your record keeper to your payroll provider. So if a participant goes onto the record keeper website and changes their contribution election, then it'll automatically go to your payroll provider, and then their system will update so that the next time that the payrolls are processed, it'll have that changed employee contribution election amount. You don't have to do any of it. Payroll 180 is a one flow kind of data, and it's basically the payroll vendor data goes directly to the record keeper. So that's the 180, is your payroll provider data goes to the record keeper. The record keeper data does not go directly to the payroll. You would have to run reports for any changes done on the record keeper site and send that to your payroll person for them to then update their system, okay? If you are interested in payroll integration, please contact your Nova account manager. They can assist you with information on, or get you in contact with your record keeper to determine which payroll providers that record keeper works with as far as Payroll Integration 360 or 180, okay? Because different record keepers are working with different payroll providers. Not all of them are in it with all record keepers yet, but more and more are going into that type of integration. All right. So quickly, I'm not going to go too much into the specific different tests because, y'all pay us to handle these tests for you, but we do want to go over the basics so that you understand what we do and why it's so important to have it done. So one of the types of non-discrimination testing that the IRS looks at if they audit your plan is what's called ADP. It's the average deferral percentage test. And it compares the average deferrals of your highly compensated employees to the deferrals of the non-highly compensated employees to make sure that there's not a large skew on who all is participating in the plan, who all is contributing to the plan. If the test fails, it could require additional contributions on the employer's part to some non-highly compensated employees, and or refunds to some of the highly compensated employees who are contributing to the plan. All right, so what is a highly compensated employee? It's an employee in the testing year who earned more than $125,000 in the prior year. That is updated for this next testing year season. A greater than 5% owner. So if you only have a 5% owner, they are not automatically considered a highly compensated employee unless they get over this $125,000 compensation limit. But if they're greater, so 5.01% owner, they don't need the compensation on top of being the owner to be considered a highly, or a lineal family member or spouse of a direct more than 5% owner working at the company, called attribution by ownership. So let's say John Doe owns 10% of the company, but his wife also works at the company, Jane Doe. She is automatically considered a highly compensated employee because her husband is a more than 5% owner, and she is his wife, and therefore she gets ownership by attribution, and she also works at the company. It only works for family members or spouses that are working at the same company. Another type of non-discrimination testing is top-heavy. This looks at the balances of key employees versus non-key employees who are in the plan. And if the key employees have more than 60% of the total balance of the plan, then the plan is considered top-heavy, and additional contributions may be required in that year to be paid to the non-key employees, up to 3% of gross compensation. Who's a key employee? Again, any owner who is greater than 5%. A 1% owner, not greater than 1%, but a 1% owner with compensation greater than $150,000, or an officer with compensation greater than $125,000. So an officer would be president, treasurer, VP, something like that. And again, a lineal family member or spouse of a direct more than 5% owner working at the company, just like with an HCE, a highly compensated employee. Great news, safe harbor plans are exempt from ADP, ACP, and top-heavy test results. So even if you have a top-heavy test and we run the top-heavy test and the result is 70%, that's more than 60% of the balances going to the key employees. If you have a safe harbor provision in your plan, it doesn't matter. You do not have to do that additional contribution to the non-key employees. It's considered deemed to pass. So there are two types of safe harbor plans. One is a matching, one is a non-elective. So the matching, basically any employee who's contributing themselves from their own paycheck gets matched by the employer, and the employer contributes specific amounts to that participant's account at the record keeper. The basic matching formula is this, a maximum of 4% if you were to do the math. There are other matching formulas that can be more than 4%, but this is the basic one. Then there's a non-elective safe harbor plan, and this is basically any eligible employee receives 3% of pay regardless of whether they contribute or not. So if you have employees who are eligible plan participants, but they say, I don't want to contribute from my paycheck for whatever reason, you as the plan sponsor would still pay 3% of employer contribution to their account within their 401k plan. The reason that safe harbor provisions deemed to pass ADP and top-heavy tests is because they are required contributions each year, and they are 100% vested upon deposit. So as soon as they are deposited, that participant is guaranteed that 100% of that money. Okay, so that's why the government says, okay, if you do this type of plan with a safe harbor contribution, we're okay with those other tests looking like they're failing. Okay. More non-discrimination testings are coverage tests, profit sharing, compensation. Not going to go into those, but those are more tests that we would have to do on our end. Plan documents. Earlier, we talked about they have to be amended timely. The IRS, Congress, they pass laws. For instance, CARES Act, the Secure Act were passed over the past year. And you have to amend the plan documents to stay current with that new legislation. And every 6 years, a document reinstatement has to occur on 401k plans. Right now, we are in a new 6-year cycle. It's called the tri-cycle. And NOVA has until July 2020 July 2022, to restate all documents that are not already on the tri-cycle, restate them or amend them to the new 6-year cycle amendment. Okay, so every 6 years you have to have a document amendment, whether you want it or not. There may be intermediary amendments between those 6 years that the government has pushed forth that has to be amended, or you have the amendments that you request because you want to make a change. You originally didn't allow loans in the plan, and now you want to allow loans in the plan, that kind of thing. Penalties do apply for failure to execute timely amendment. But you shouldn't have to worry about that because NOVA makes sure that amendments are done timely. The only thing you need to do is make sure that you electronically sign those amendments by the time we tell you to sign them. A couple of main areas that the plan document lists on specifics are these items, and they need to be followed by the plan document. If you aren't sure how to interpret what the document says or the adoption agreement says, contact your account manager and they can go through it with you, okay? But the eligibility, how much service or age do you have to be eligible to participate in the plan? The entry date, do you allow newly eligible participants to enter once a month, twice a year, once a quarter? That's stated in the document. What compensation is used is stated in the document. Do you exclude moving expenses, from eligible compensation for contribution withholding calculations? How the employer contributions are allocated, and then vesting. If you have contributions like a profit sharing that you want to have it on a specific vesting schedule, meaning you want to give a profit sharing to your plan participants, you would like them to be with the company for at least 6 years before they are fully eligible in that to be 100% vested in that profit sharing contribution. So all of that information is in your plan document. There's a lot of errors that are common that are made just because someone was working on the plan who wasn't sure of everything, and simply because 401k plans, there's a lot of moving pieces. There's a lot of regulations. There's a lot involved. Again, that's why you have all these other parties help you with your 401k plan, because we want to help you we want to help prevent these common errors that I'm going to talk about right now. So let's say you're working on your payroll deductions with their employees' contribution deferral elections, and you give a bonus to your employees, but you don't withhold their contribution election percentage from their bonus. You need to make sure that the document states that if you're not going to withhold contributions from bonuses. You can put that in the document to exclude bonuses, but you need to make sure that the document states that. Again, excluding part-time employees, that's kind of similar to hourly employees, what we talked about earlier. Matching catch-ups separately from non-catch-up contributions. So what does that mean? That means that when you are 50 or older, you can exceed the annual deferral limit or the annual employee contribution limit. Right now, it's $19,500 for the 2020 plan year. If you are over the age 50, you can do an additional $6,500 catch-up for that year for a total of $25,000 versus just the $19,500. So some companies stop matching at $19,500 and they forget that they need to match that additional $6,500 catch-up. So that can be an error. Matching Roth contributions separately from pre-tax. If you have a plan where you allow Roth contributions, which is post-tax employee contributions, and pre-tax employee contributions. Let's say you have someone who's doing 3% post-tax, 3% pre-tax for a total of 6. You would total those two together and then calculate the match on those two amounts. You don't do the match separately on the Roth versus the Roth post-tax versus the pre-tax. You combine the two and you calculate the match on the combined two types of employee contributions. When you have an amended plan document, there's something called a summary plan description, or when you have a newly eligible participant, they have to be provided the summary plan description. Not distributing it is an error. So when you have a newly eligible participant, you not only give them information on how to set up their account with the record keeper, but you also give them the summary plan description, and it's a written out explanation of what the plan document states. A big error is forgetting to make a procedure on how to track when a new employee is going to come up to being eligible to participate in the plan. So if you have someone who was hired on January 1st of 2020, their 1 year of service ends on December 31st, 2020. They're over the age 21, they've had their 1 year of service, and you allow entry dates on January 1st of each year, they should be eligible to participate on January 1st, 2021. You forget. The holidays are here. You forget to tell them that they're allowed to start participating on January 1st. You forget to give them all the information they need. That is an error. So procedures do need to be figured out. It could be something as simple as setting a calendar reminder on your Outlook. So-and-so has hired this, so within 10.5 months of their hire date, you need to start looking at when they're going to be eligible to participate and when they're going to enter. So just have something set up to track that so that you don't miss those newly eligible people. And then not capping the matching contribution based on annual compensation cap. So every year, the government gives an annual compensation cap, meaning, so for this year, it's $285,000. You can be matched on your employee contributions up to $285,000. If you make $400,000, doesn't matter. You can only receive match up to that compensation cap for the year. So you need to make sure that if you're doing payroll internally, or if you have a payroll provider, make sure that the system is set up to cap for matching based on the compensation limit. I'm not going to go into this because we already talked about that. Here's an example of capping the match. So let's say the plan's matching formula for 2020 is 50% match of the first 6% an employee chooses to contribute. Then the maximum matching amount any one participant can receive is $8,550. The compensation limit for the year is $285,000. So we come to that because we take $285,000 times 50% times 6%, and that is how we get the total. Okay. Initial eligibility. So the maximum wait time allowed on a 401k plan is 1 year of service, and they must be age 21 with a minimum of 2 entry dates, usually January 1st and July 1st, okay? You can be more liberal than that. You can say, okay, well, we're only gonna make them wait 6 months and then enter the first day of the next month. They have to be 18 or older, not 21 or older. So you can go shorter waiting periods and younger ages, but the maximum allowed is this 1 year of service, age 21 with 2 entry dates, okay? Here's the part that gets some people. The initial computation period in the 12-month anniversary from the date of hire changes to the plan year. So the very first determination of when a new employee can enter the plan can span over a year and a half or 2 years worth. And here's an example of what that looks like. So the first computation period is from their date of hire, 6/1/19, to their 12-month anniversary of 6/1/2020. Okay. They have to have worked 1,000 hours within that first anniversary. If they did, then they would enter on 7/1/2020. Let's say there's semi-annual entry dates. All right, so the next entry date after the 6/1 anniversary date where they worked 1,000 hours is 7/1. Let's say this first computation period, they did not work 1,000 hours. They only worked 800 hours. They would not enter on July 1st. Then you switch to the calendar year period every subsequent period. So then you would look at the 2020 calendar year, 12/31/19 to 12/31/2020. They worked 1,000 hours during that year. Yes, you still count the hours worked from 12/31/19 to 6/1/2020. You count the whole hours for that calendar year. If they did work 1,000 hours in that calendar year, then they would enter on the next entry date, which would have been January 1st, 2021. Okay. One more slide, and then we're going to move to Katrina. Dealing with rehires. Rehires can be very confusing. It never hurts to contact your NOVA account manager to talk through a rehire to determine if they are eligible to participate in the plan upon rehire or not. But here are the basics. If a formerly eligible employee, so they were eligible to participate in the plan, ever had a single vested dollar in the plan, he or she never loses their prior service credit. Okay. So then they would enter the plan upon their rehire. So let's say someone had entered the plan, they had contributed $100, then they terminated. They come back 2 years later, they can participate in the plan immediately upon their rehire date. They can start participating that day. If they never had a single vested dollar in the plan, then they would lose their service credits after 5 consecutive one-year breaks in service. So if they were rehired within 5 years, 5 consecutive years, and they did not have any money in the plan ever that they were vested in, they never contributed to the plan prior to their termination, then you can restart their requirements to enter the plan. You can say, okay, you need to wait another year of service before you can enter the plan. Okay. If they never had a single vested dollar in the plan, but then they're rehired within 3 years, but they were eligible to participate in the plan prior to their termination, they just never contributed, and they're rehired within 3 years, then they would start being able to contribute the day of their rehire. Okay, immediately upon their rehire date. So if you're looking to rehire someone, you definitely want to check if they were eligible to participate prior to the rehire. Did they have money that they contributed prior to the termination? And were they rehired within 5 years of that termination? Okay. If you look at those 3 things and you look at this slide and you still aren't quite sure if they're eligible to participate the day of their rehire or not, give that information to your NOVA account manager, either via phone or email, and they will walk you through it on how to determine if that person is eligible on the date of their rehire or not. Do we have any questions on any of that information before we move to Katrina?
Hi, Lisa. We haven't received any questions. So for our audience, if you do have any questions, please go ahead and submit those in the questions box.
Perfect. Thank you so much. I will move it on to Katrina then.
Thanks, Lisa. So the good news, everyone, we're more than halfway through to the end. Lisa gave a lot of really good information there, and as she mentioned, there are a lot of moving pieces and things to remember to help you keep your plan in compliance. And again, the good thing about that is you have NOVA as your TPA, as well as your other service providers to help you keep all your ducks in a row, so to speak. So just to reiterate the different actors and different role players within the plan and hopefully everyone can see my screen. I think it transferred over. Okay. So of course you have your record keeper, the investment provider. That's the company that holds the plan assets. Who do you send the money to? That's your record keeper. They're the ones that hold the investment portfolio. If you have employees who they need to make an investment election or change their investment election, that's who they go to in order to do that. That's your company that when folks need to initially sign up for the plan and get most of the time website access, they would do that through this company. They provide the participant statements, whether it's monthly or quarterly, as well as the year-end reporting for you all and also our purposes as well. And they also assist with participant education and communication throughout the year as well. Nova, as your TPA, just like Lisa mentioned, we handle the annual compliance and non-discrimination testing, which we're coming up on another round of that for our year-end plan. So that's when you send us your census data in January every year. We also sponsor the plan document and assist you in consulting with plan design and drafting, just making sure that the provisions that you have in your plan meet your company's retirement needs, and if not, coming up with solutions for you. We also have a dedicated distribution and loan processing department. Those are our folks that when employees want to withdraw from the plan or they're wondering if they're eligible to take a loan, they'll be able to assist with that and also review that loan and distribution paperwork to make sure that it's in compliance with the plan's provisions as well as IRS guidelines. And at Nova, like Lisa mentioned, we prepare your Form 5500, which is just one of the government reports that's required in any disclosures for you. And then the last piece, but certainly not least, the investment advisor, I'm sorry. That is your contact that assists you with client relationships. They'll do the investment lineup, picking out the investments that might best suit your plan. And they'll do an annual review of those funds, just making sure that the fees and the fund returns are reasonable for you. And they also assist with the record keeper as far as enrollment and your participant education. So a lot of different moving pieces. So we thought what we do is just go through how these different things happen and who takes care of what, sort of from an FAQ type standpoint. So first thing we'll look at is how does the money, the contributions, get to the record keeper? Most record keepers will give you they have a secure website with you, and you have your own unique login you use, where you log in, and that's sort of your hub to see everything with the plan as far as assets are concerned. So it's that secure website that you'd use to upload the contribution information. In most cases, they have a spreadsheet of some sort where you would list each person that's due a contribution, and then you'd list the contribution type. So within that spreadsheet, you'd list the employee contributions separate from any company contributions. And when it's uploaded to the record keeper website, they're then able to track those different types of contributions separately. So that when you go in and you take a look at your latest contribution, you'll see, okay, and you ideally would reconcile it to your payroll. You'd see, okay, yep, $1,000 of employee contributions and $1,000 of company contributions. That matches my payroll. I'm good to go. The next is who calculates the employer matching contribution. So it really just depends on the frequency with which your match is calculated. If your match is calculated on a payroll by payroll period basis, that means each payroll, there's a match calculation based on how much each person puts into the plan. That is generally calculated by you as the plan sponsor and or your payroll company. They can assist you. It just doesn't, it's not the most efficient process to have for you to send payroll information to Nova each week, for us to send it back, for you to confirm, and then you to send it to the payroll company. And like Lisa mentioned, there's Payroll Integration as a solution for that as well. If you're calculating your match, though, annually, Nova will take care of that for you. So if you're a calendar year end planned, if we are, you're sending us your census data in January and you have an annual match calculation, we will use that census data, calculate the match that's due for you, and then we'll provide you with an allocation report that shows you how much of a match contribution each person is due, so that you can upload that to the record keeper website and be able to deposit that match amount for them. The Form 5500 that Lisa mentioned, which is that annual information return that most plans have to file. Like Lisa mentioned, Nova will prepare that for you. We prepare it for you ahead of your deadline unless you tell us that you need an extension, and we'll send you a signature ready link. Signature ready 5500 in the form of in a website link, essentially, where you'll be able to click that link, log into that site there, view your 5500, and then type in your signing credentials to sign and e-file the Form 5500 with the Department of Labor. But good news is that Nova takes care of preparing it. We use the year-end census data that you all provide to us, as well as the year-end reports from your record keeper, compile that information, complete that 5500, and send it over to you for filing. Another common question, the money goes in and inevitably folks need to take a withdrawal, whether it's because they're terminating employment or for some other reason. So how do employees start that distribution process? How do they start the withdrawal process? Where do they get the paperwork to start that process? In most cases, we suggest that you provide them with the distribution paperwork, or at least something telling them where they can go online, because online is usually a faster process for them to initiate a withdrawal. But you provide that to them as a part of their any sort of termination paperwork or termination packet that they might receive, whether it's an exit interview or your COBRA notices. It's a good idea to give that to them at that time. And that accomplishes two things. Lisa mentioned that for employees with balances less than $5,000, if your plan allows you to, you can automatically roll them out of the plan. So it starts that time clock, so to speak, the 30 to 45-day window as to when you can force them out of the plan. But then it also helps to keep the plan clean. If you give them that notice then, while it's fresh on their brain, they're more likely to initiate the distribution sooner rather than later, where they may move a few times, you may have to find a new address for them, try to track them down. That really accomplishes that goal there. And then, if needed, Nova can assist you with mailing distribution paperwork to employees. It would be an additional cost, but it is something that we can assist with. Another moving piece surrounding 401k plans, annual and required notices. Who's responsible for distributing those required notices? That is a plan sponsor role. We do have a sister company, though, called AFS that can handle this for you. But if you don't want to use AFS, or it's not something that's an option for you at that time, you would send out the annual notices. And listed here, we have a few different, the primary sort of first to come to mind annual notices, and I'll go through each one of them. The first is your summary plan description. The summary plan description is a notice that is basically the layman's version of the legal plan document. It's presented in a way that's reasonably easy to understand and in a question and answer format, almost like an FAQ for your employees surrounding the plan. So it tells them there's a question in there: when am I eligible to start participating in the plan? what types of contributions can I make? What types of contributions may my employer make on my behalf? When can I take a withdrawal from the plan? And other questions like that. That is a notice, the summary plan description, which you might hear us refer to as the SPD. Best practice for that is to give that to your employees with their enrollment paperwork. So at the same time you provide them with the enrollment paperwork, give them a copy of the summary plan description as well. The summary annual report, which is that SAR. That's usually a one-page report. That's just a quick summary of the information that was filed on the Form 5500 with the Department of Labor. That does have to be given out annually. And again, it's just an overview of the information on the Form 5500. So it states things like the number of participants that were in the plan for the year, the dollar amount of total contributions and total withdrawals and total earnings to the plan, just those overall numbers, nothing about a specific individual account. That is due actually to participants within 2 months of the Form 5500 filing due date, including any extensions. So if you're a calendar year in plan, your Form 5500 filing due date is July 31st, and you have until September 30th to send out the summary annual report. But if you filed under an extension, you would have through December 15th to send that out. The special tax notice, that's a notice that is required to be given to employees when they request a withdrawal. In most cases, your record keeper is going to include the special tax notice with the distribution paperwork that the employee would fill out to initiate their withdrawal, but in some cases it's a supplemental notice. The annual safe harbor notice. So Lisa mentioned that your plan can elect to make a required safe harbor contribution. If you do elect this provision, then there's an annual notice that has to go out. If you're a December 31st plan year end, the safe harbor, well, let me back up, I'm sorry. The due date for the annual safe harbor notice is 30 days before that plan year begins. So if your plan year ends December 31, for January 1, for your 2021 safe harbor notice, your due date to get the safe harbor notice out is actually today, 30 days before January 1st. So if you have your 2021 haven't given out your 2021 safe harbor notice, you don't know where to find it, you have questions about it, or you just aren't sure, contact your NOVA account manager for sure, and they can assist you. The next notice is the 404A5 fee disclosure notice. And just like the name says, it's a fee notice that just notifies the participants of the fees associated with the plan, both the funds and any administrative fees as well. That notice is typically created by and provided by the record keeper on the plan each year. And then the annual automatic enrollment notice. This is a notice that only applies if your plan uses automatic enrollment. So if you're automatically enrolling your participants, you have to provide them with an annual notice. If this is, again, just a summary of notices that all of these don't necessarily apply to every single plan. Another good thing is that we do have copies of your summary plan description, if it's applicable, the safe harbor notice, and also if it's applicable, your automatic enrollment notice. The three of those would be found on our plan sponsor link portal, our secure website for you, under the documents section. So if you're unsure about any of those, about where to find those notices, or you need to go and grab one really quickly, you can always go to our plan sponsor link portal. And again, under that documents tab, you'll be able to find the summary plan description, and if they apply to your plan, the safe harbor notice and automatic enrollment notice. So now we're moving on to distributions. Again, we talked about putting money into the plan. But a common question and just a part of having a 401k plan is that folks inevitably will need to access the funds. So taking the distribution. Before we go into the heavy details on that, earlier this year, as a part, just being in the COVID pandemic, Congress passed and the President signed the CARES Act, which is a law to give special relief to participants, to 401k plan participants, where they may be able to take a distribution or loan from their plan if they were impacted financially by the COVID pandemic. This is a special relief that applies just for this year. So the distribution provision of it expires, for right now, as far as we know, it expires on December 30th this year. So if you have participants who they're asking about taking a CARES Act or a COVID withdrawal, they can do so through December 30th. Different record keepers may have a more immediate deadline as far as when they need to receive that paperwork, but in general, it's December 30th. If you have questions about whether your plan took advantage of this CARES Act relief, if participants can take those coronavirus distributions or anything else surrounding the CARES Act, definitely reach out to your NOVA account manager, and they'll be able to give you specifics on your plan. So distributions, like I said, money goes into the plan and it's inevitably going to leave at some point. But there are rules surrounding when that money can actually be withdrawn. 4 primary reasons as to when someone can take a distribution. Of course, termination of employment or retirement. Some plans also allow for withdrawals, in-service withdrawals when folks reach age 59 and a half, or hardship withdrawals if someone has an emergency, and these are very specific, what the IRS defines as emergencies, and also for death or disability. So we're going to go into each of these specific withdrawal reasons. Termination of employment or retirement, like we said, it's inevitable, and that's really what the plan is set up for, to help folks save for retirement. So people can initiate withdrawals either using withdrawal forms from the record keeper, but the quickest way is usually to initiate it online, as long as the record keeper permits you to do so. They can submit their withdrawal forms on their termination date, after their termination date. Some folks, retiring December 31st, they might say, hey, I'm going to go ahead and submit my paperwork to withdraw my funds now, but it can't actually be processed until their last day worked. Most of the forms that you would get from the record keeper, or when they initiate the distribution online, they will have a section on the form or in the withdrawal request where it will ask for the last date or the date of the final payroll contribution, and that will let the record keeper know, hey, don't actually process this until after this date. And like we mentioned when we talked about notices, when there's a termination of employment or retirement, the employee does have to get the tax notice, and that's usually included with the termination paperwork or as a part of the termination process online. The next type of distribution is an age 59 distribution, 59 and a half distribution, which you may hear us call an in-service withdrawal. Your plan is not required to allow folks to take a withdrawal at age 59 and a half, but you can have that provision in your plan. And really the goal of this is to allow employees to start making preparations for retirement while they're still working. So if they're trying to maybe consolidate all their retirement accounts, or they need to plan for tax purposes, do withdrawals at that time, this is really the goal of those age 59 and a half distributions. If you're unsure if your plan allows for these types of distributions, or you'd like to start allowing for them, definitely reach out to your NOVA account manager and they can get you started there. Hardship distributions are another type of allowable withdrawal. Again, not required. Your plan does not have to let folks take a hardship withdrawal, but you can, you may. And it gives employees access to their 401k account in the event of an emergency. The emergency, I say emergency loosely because the IRS has very strict withdrawal reasons, or what they define as emergencies. And I'm going to go over those on the next slide. But generally, these types of withdrawals are subject to the 10% early withdrawal tax if the employee is under age 59 and a half. So those very specific allowable reasons under the hardship distribution rules here. First is the purchase of a primary principal residence. So has to be the primary residence, and I'll preface all of this, I guess, by saying the employee would need to provide supporting documentation for each one of these reasons. So, for example, purchase of a principal residence, they'd need like the good faith estimate or the closing contract, something along those lines. Amounts needed to prevent eviction from a home. So if they, or foreclosure, I should say too. So if they're on the edge of eviction, or they've received a foreclosure or eviction notice, they can take a withdrawal from the 401k account in order to pay those amounts that they're behind. Unreimbursed medical expenses. Those are medical expenses for the participant, their spouse, dependents, or in some cases beneficiaries. Post-secondary education, casualty losses, and also burial expenses as well. So very specific reasons there. There are some fairly new rules surrounding hardship withdrawals. I won't go too much into detail on those, but basically in 2019, the hardship distribution rules were expanded to make it easier for folks to be able to take a withdrawal from their account for those hardship reasons, and to have access to more money as well. Death distributions, if a participant were to pass away, their beneficiary would be able to access their funds. The key thing here to remember is that it's very important for this very purpose that you get beneficiary election forms from all of your plan participants. A good rule of thumb, when they get that enrollment paperwork and they turn in to you their investment election, double check and make sure that they've also given you a beneficiary election. It's always good to do that. It avoids issues with determining who actually is entitled to the funds. And also, anytime that maybe they have a major life event that causes them to have to change make changes to their other benefits, a good rule of thumb is to make sure that they do a new beneficiary election for the plan as well. In case there isn't a beneficiary election on file, the plan document does tell us how to actually distribute the account. But like I said, a good rule of thumb is to make sure you have a current beneficiary election for all of your participants. Age 72 distributions, which is kind of weird to say. You may have heard them commonly called required minimum distributions, or R&Ds. I won't go too much in detail on these because under the CARES Act relief package that was passed earlier this year, the required minimum distributions are waived. But generally, folks that are age 72 must begin taking money out of the 401k plan unless they have terminated employment or they're not an owner. They can delay the distribution, the required minimum distribution then. Quadros, which are a qualified domestic relations order. These most of the time come up in the context of a divorce where one spouse has been ordered to pay a portion of their plan balance to the ex-spouse. The key here to remember, if you're notified of this type of order or that this type of order is pending, contact your NOVA account manager. These rules are complicated, things can get messy, and this is something that we're here to help with and make sure that this is all taken care of and the plan remains in compliance and doesn't violate any of these orders. So if you get word of a participant comes to you and says, hey, I may have to pay my ex-spouse part of my 401k plan. I'll let you know later, once I get the details. First thing you want to do, notify your NOVA account manager. Spousal consent. In most cases, plans don't require spousal consent for participant withdrawals. That's just a general rule. There are certain types of plans that do require spousal consent, including old money purchase plans, floor offset plans with DB plans, but in general, most plans do not. If you have a question about whether the spousal consent is required for distributions, again, reach out to your NOVA account manager. They can help you understand those rules for sure. Loans. So participants can take full-on distributions of their accounts as long as they have one of those qualifying reasons, right? Termination of employment, age 59 and a half, hardship, and the plan allows for such. But your plan can also allow your plan participants to take a loan from their 401k plan. It's very popular. Most plans do allow participants to take a 401k loan of some sort. The benefit to the employees, I guess, is that it's not taxable to them like a distribution would be. But there are very certain specific rules that apply to 401k plan loans. So we'll cover those for the next few minutes here. The rules surrounding the loan. So participants can borrow the lesser of 50% of their account balance and $50,000, reduced by their highest outstanding balance during the last 12 months. That is a lot. And that 12-month look back is crucial in a lot of cases. So again, questions about how much a participant can take from their account balance in the form of a loan, reach out to us and we can help you determine that. But in general, right, if you had what this says is if you had someone that had a $50,000 vested account balance in the plan, the maximum that they could take in a loan, as long as they've never had a loan in the past, would be $25,000. So general rule of thumb there is the 50% rule. Most plans do state that there has to be a minimum loan of at least $1,000 if someone takes a loan, which would mean that the participant would have to have a vested account balance of $2,000. Also, loans are subject to an interest rate, and it has to be a reasonable interest rate. In most cases, that means it's tied to the Wall Street prime rate, and it's usually the prime rate plus 2%. Loans do have to be paid within 5 years. The only exception is for residential mortgage loans. So if it's just a general purpose loan, I needed some funds to, I don't know, build a fence around my house or fix my car, the repayment period has to be no more than 5 years. The repayments are made through payroll deduction on a post-tax basis. So what that means for you is if you have a participant who takes a loan, you would receive, once that loan is issued to them, a copy of a repayment schedule, an amortization schedule that says each pay period, for example, $50 has to be repaid to the loan in order for it to be repaid by that 5-year or whatever term the participant has elected. So in payroll, you need to set up that payroll deduction for that loan repayment on a post-tax basis. And then I think this was mentioned on an earlier slide, loans are generally not taxable to participants as long as they're repaid, but as soon as the participant terminates employment, the loan does become due, the full outstanding loan balance at that time. There may be some fees for participant loans, whether it's an initiation fee or an annual or monthly maintenance fee, but those are assessed to that participant's account and they're notified, of course, when they get that annual participant fee disclosure from you, but then also when they initiate the loan. And then with loans and distributions in general, the fastest way for a participant to request a loan and distribution, for it to get processed and for them to get their funds, they request it online through the record keeper's website. Most record keepers are up to date there and they allow for online requests. And then as far as getting their funds, they can request on that paperwork or when they initiate their request, to have the funds sent via ACH or wire instead of having a paper check mailed to them. So I think we have about 5 minutes or so left, maybe. Are there any questions, Jasmine, before I start on the calendar here?
We still have not received any questions yet.
Okay, so we have just a few more slides. We have an annual calendar. It kind of goes over important time frames and dates to remember if your plan is a calendar year-end plan. So while we're going over that, feel free to type your questions into the chat box there if you do have any. While we're going through that, we kind of thought it would be helpful again to just go over important things to remember, important dates throughout the year when it comes to your plan. And we've broken it up by quarter. So in the first quarter of the year, and again, this is if your calendar year-end plan, while you're busy, reconciling things for year-end, we also need to get the plan squared away for year-end. So we'd be sending you an email to ask you for the year-end census information, and that's so that we can complete the annual compliance testing, calculate any contributions that you might request of us. And then also the March 15th date here is very important because it's a key date if your plan is subject to ADP and ACP testing to have any refunds processed. Also during this first quarter and specifically in January, your record keeper would be mailing out Form 1099-Rs to participants that have that took a distribution in the prior year so that they can report it on their taxes. In the second quarter, key date there, April 15th, not just for taxes, but also for 401k plans, mainly for required minimum distributions in years that they are required, not 2020 anyway, making sure that those are processed for any participants where they deferred from the prior year, and then excess 402G refunds. The 402G limit, again, is that IRS limit on the maximum that any one person can contribute to the 401k plan. So we're looking at whether anyone exceeded that limit and then making sure that refunds are processed by that date. This is also the time frame when NOVA begins working on the Form 5500 filing for you. Around this time, we'd either send you that filing link, or if you're a large plan that's subject to an audit, we'd send you your draft 5500 and start coordinating with your auditor to get them all the information that they need to complete the audit. The third quarter, the July 31st date, is very important. That's the due date of the Form 5500. So we'd be making sure that your Form 5500 is filed by that date. And then if not, if you need more time to file, we'd prepare an extension for you to give you more time to file. Also in the third quarter, we continue to work with your plan auditor if you're a large plan that's subject to an audit. We may also reach out to you about doing some mid-year testing and doing annual mandatory cash outs for terminated participants with balances under $5,000 in your plan. And then in the last quarter, just like you'd probably be doing, we're wrapping up year end for the plan and getting ready for the new year. The October 15th date is important here because we'd be, if you ask us to extend your Form 5500 due date, this October 15th date is your new extended due date, so we'd have to file 5500 for you by then. Making sure that we're starting those R&Ds for you. We will calculate how much is due for each person when they're due and then helping you with the paperwork. We'd also be sending you a reminder about your safe harbor or automatic enrollment notice if your plan is subject to those notices. And then also with December 31st being a deadline for certain amendments. If your plan is subject to amendments or has had an amendment that needs to be signed, we'd just be making sure that that's been signed and is all squared away and ready to go. Just want to mention really quickly, we talked about notices and how our sister company, AFS 316, can handle those annual mailings for you. each year. So if that's something that's just a headache for you and you'd rather have someone else take care of it, let us know. You can contact us and we can put you in touch with AFS for more information on what's involved there for sure. In upcoming webinars, as we head into 2021, we're constantly updating our webinar schedule. So check out our website at this link here if you're interested in attending any of our webinars next year. A reminder about the CPA credit. After we complete this webinar, you'll get an evaluation survey that comes to you as a web link from GoToWebinars. So if you need CPA credit, make sure you complete that survey and you'll get certification via email from us. And that's all. We have our contact information listed here if you do have any questions. And of course, if you don't have any questions today, but you think of something tomorrow, or I don't know, while you're making holiday cookies later tonight, feel free to reach out to your Nova account manager and we can help you out there.
Thank you, Katrina, and thank you, Lisa, for presenting that information. And thank you to everybody for joining us today for an introduction to 401k plans. Please note there will be an email you will receive about an hour after the webinar with the survey for you to complete if you need CPA credit, so be on the lookout for that. These certificates will be sent out in 1 week, and a recording of this webinar will be made available on our Nova YouTube channel by the end of next week. If you do have any questions, please reach out to your account manager and they will be happy to assist you. And for any other questions, like if you need the recording or slideshow, please reach out to webinars@nova401k.com. Everybody have a wonderful Wednesday.